I don't want to sound like a complete lunatic. I don't want to sound unhinged
You already do.
because
It's okay. Just accept it. Just let it go.
just ride with it.
Here's Johnny.
We'll build our empires and then we'll split it up. I'll take the North, you take the Merkaz, and we'll find somebody in the negative to take them. And then we'll have like a triumvirate, and people will fan us with giant leaves and wine, and it'll be fine.
Jumbie, the chocolate icing. Oh, oh my, yes. Oh.
That's exactly what's going to happen. Hey guys, Rafi here from the Endgame Investor, and today I've got Oren Elbath on the line. He is the Silver Hermit on YouTube. I will put his channel in a pinned comment below. Check it out. He's one of the few people, I can count them on one hand, whose theoretics, whose theory I can respect. I don't know if we agree on everything, but at least I do want to hear what he has to say about gold and silver theory, because he, like me, believes that gold and silver are actually money. Maybe not in the same exact way that I do, but pretty close. We're going to discuss mainly whether there's going to be one final crash in gold and silver in the deflationary storm that I think we both believe is coming, or whether it's not going to happen this time. I lean towards there's going to be one more crash, but I'd be happy for there not to be. I'm not married to that opinion. So it's just an empirical opinion I have. I could be wrong about it, and Oren will try to convince me otherwise. We also might talk a little bit about Japan and whether Iran, or Persia as it should be called, because Iran is a colonialist name invented by probably the British or some derivative, whether the Iranians or the Persians are trying to trigger an oil spike up to $250 when the SPR, the Strategic Petroleum Reserve, runs out and countries that rely on exports from Hormuz no longer have any oil, and then we have a crisis. But what I think they might not understand is they might get Trump that way, but they'll also trigger the end game, and I don't think they understand that. I'm happy for them to do that because I'd rather it come, and I know it's going to be rough when it comes. I'm not wishing chaos on anybody. I'm just prepared for it. That's all. So, Oren, how are you doing today? And what do you think? Is there going to be one more gold and silver crash or not? Or do you want to answer the oil question first?
So good morning, and it's a pleasure to talk to you as always.
I'm finishing my coffee.
Let's talk about that crash, that potential crash, because it's something which has been bugging me for quite a while. Everybody is saying, hey, we've seen time and time again gold and silver getting dragged down with the stock market whenever we have a recession or some kind of a financial crisis. And why shouldn't it happen this time as well? And I'm getting this, this feeling, this hunch. It relies on a few factors. I'm going to explain them. Why we possibly won't see a crash this time. This means that when, for instance, everything melts down, the stock market melts down, just gold and silver will take off and not look back. And I see this possibility now. I have to, there's a caveat here. I don't want to sound like a complete lunatic. I don't want to sound unhinged.
You already do.
because,
It's okay. Just accept it. Just let it go.
just ride with it.
Here's Johnny.
Look, the point of the matter, I don't want people to do reckless things. I don't want them to go all in into gold and silver and be left with absolutely no fiat. And then if there's a recession and they get laid off, then they won't have any fiat to pay their bills. I don't want that to happen. But on the other hand, I don't want people to be under the impression as though there's going to be a crash, gold and silver are going to fall, and then they're going to just, waltz in and pick up some gold and silver on the cheap. And what I'm arguing is that there is a possibility that you won't get that chance. And therefore, if you had any intention to buy more gold and silver and you're just sitting on a bunch of fiat and waiting, perhaps it's a good time to buy them now, because even if we do get like a spike down, it could be very short-lived. It could be, a matter of hours. It could be over within a few hours. You won't get the chance to buy. Or as the spot price is falling, premiums could be spiking. So you won't get to enjoy the low spot price. It's going to be some kind of an artificial construct only made so that banks can get out their short positions on the expense of people who's going to participants in the futures market who are going to get margin calls. So stackers like us shouldn't expect or wait for that crash. If they have any intention to increase their stacks, now's the time.
Okay, Oren, before you get into the theory on why you think there might not be a crash, I just wanted to put this out there, and I think you'll agree that it's probably not a good idea to specifically wait for the crash to stack more physical metals, right? I don't think that's going to be worth it because I agree with you. If it happens, it's going to be short. I don't know if it's going to be 2, 3 days or a few hours, but I know it's going to be short because the Fed's going to act quickly to reverse it. But there is a way to prepare for the crash that's going to happen, even if it's an hour or two. And that is, don't put your account on margin for mining stocks. Don't go deep into margin. A little bit is maybe okay, like a few percent just to cover something. But if you have serious margin positions and you're like 30, 40% margin, and even for an hour, if the stocks crash, you could get margin called, you could get liquidated. So don't do
Yes.
that.
So my approach is not to use any kind of margin, any kind of leverage, any kind of debt at all. So I'm mainly in physical precious metals, and I do own some mining stocks, but I own them outright without any leverage. So if you're unlevered, if you're not using a margin account, as you said, then you're good. Even if their
Well,
prices crash for a while,
unless
you
the
won't get kicked
brokerage
out.
unless the brokerage takes them in the great taking, that's what some people believe. I'm not sure what I believe about that. Might happen, might not. I don't know. But
Yeah, but in that case, your physical
mhm.
stack is going to do
Yes,
even
that's
better
true.
because people want them.
That's true. Physical stacks are a hedge against the great taking. Yeah, that's true.
Exactly. So what is the, most obvious argument in favor of gold and silver not crashing during the end game? Well, obviously they already had their correction. I mean, like since January, gold has lost something like 30% and silver 55%. That's a huge drawdown from the top. So,
We've seen
like,
bigger.
how?
Silver has gone down, let's say from 1980 to 2000, it was gone down like 95%. That did happen. So it could go much farther.
Yes, but I don't think we're in the same
I
situation.
don't either. I'm just
Uh,
putting it out there.
Look, if we're looking at the environment we're talking about, if we're talking about a huge drawdown as a result of a liquidity crunch, like we had in 2008 or in 2020, then we've already had the crash. I mean, like in 2008, I think silver lost something like 60%.
Mhm.
And in 2020, it lost almost 40%. So we lost 55%. We're, you know, in the middle of
Okay.
that. Perhaps, I mean, like, I can imagine silver falling to 50 or slightly below 50.
Mhm.
But just from the point of view of having all the froth, drained out of the market, the fact that there is no more speculative fervor around gold and silver right now. So that has been, taken away. It doesn't exist. Whoever will be selling in the next crisis are, these are the strong hands because only strong hands are left. So what can force strong hands to sell only if they got themselves leveraged, only if they, have margin accounts. And I expect banks to take advantage of that immediately. It's going to be perhaps if there's going to be a spike down, perhaps it's going to be a matter of a few hours because there aren't a lot of sellers left and there are going to be plenty of buyers to, to buy the
Okay.
dip. we do hear that, for instance, China is misreporting the amount of gold that it is buying.
China never lies
Uh,
about anything. What are you talking about?
I can't lie!
So, we could have sovereigns buying gold, offsetting any selling without us even knowing. So I wouldn't like count on that as an explanation of why gold and silver should fall even further. And
Okay,
also,
fair, fair.
the price, the official price is, it has very little to do with physical buying or selling. It's a game which is conducted in the futures markets.
I think in your notes that you sent me, you said that you believe that the bond market, which is traditionally the safe haven during times of liquidity crunch, is not going to be so this time. Well,
Yes.
how would
I'll,
that happen? How is that possible? Because my question is like when there's a liquidity crunch, people don't sell assets to get dollars because they suddenly love the dollar. It's not like, oh, I forgot the dollar's money. Yeah, we have to get it. They're not saying that. They're saying, well, this supplier or whatever is saying that if I don't give him dollars, he's going to shut me down. So I have to give him dollars. And then everybody says that to everybody else in a circle, and then it just goes. That's what's happening. There's no sudden realization. It's just force. Everybody's forcing everybody. And because everything is denominated in dollars still, what would stop that from happening?
I'm not sure there will be, but this is not, the precise point I'm focused on. I'm focused on the people who do have dollars, who have enough dollars, who, for
Hmm.
instance, sold all their stocks right now because stocks are melting down. They got out of their tech stocks and now they need a safe haven asset.
Hmm.
What are they going to buy? Will they buy bonds? Or will they say, oh, bonds are not performing well right now. We still do have inflation and, bond yields are rising. Japan may be defaulting. The US may be next. Perhaps I want another safe haven asset. Perhaps I want some gold. Perhaps I want some silver. And perhaps I just want to, I want to hedge my bet. So, I'll put half of that money into the 10-year and half
Hmm.
of it into gold. That's enough. Or even 10% into gold. It's going to shift the balance of power because in previous recessions, crashes, bonds were the safe haven asset. They were the flight to safety. But
Hmm.
now, bond yields are rising. That means their market price is falling. That means people are not so enthusiastic to lend money to governments anymore. And perhaps, inflation is fine. They finally realize that we have inflation in the background and the bonds are not doing well in an environment of inflation. Then perhaps some of that capital is going to shift towards bullion, and that's what's going to make the difference. Because I think even on the margin, even if you have just a tiny bit of flight to safety during a meltdown towards gold and silver, because in prior years they were mainly considered as industrial metals. So they fell together with the rest of the market because there was an expectation that there was going to be less of a demand for industrial metals, industrial materials, less industrial demand. But now, we've already had this initial rally during 2024 and 2025 in precious metals. They've already demonstrated what they can do. And, bonds have already demonstrated their weakness. So, this is like, I don't know exactly what people are going to do during the next meltdown, but I think there's a good chance. I think there's a good chance that people have already realized that the bond market is not the way to go.
Hmm. Okay, so let me put a little bit of a wrench in that and see what you say to it. So I'm not sure who buys 30-year bonds, 20-year bonds, 10-year bonds. If they're individuals like you or me, probably very few that are saying, well, I personally need a safe haven to save my nest egg, and therefore I'm going to buy a bond because I think it's safe. Or mostly it's just institutions like insurance companies, pension funds, and this and that that are controlled by humongous government regulations that say you have to have bonds because if not, we're going to shut you down. So they would still be forced to buy bonds in a because they have to go after the safe asset that's defined on the books by safe asset, which is not gold, it's bonds. Um, I don't. I mean, at some point, even that's going to break. Is it going to be this time? I'm not sure.
Like I personally know people who during 2020 bought the long bond as a hedge against the market crashing. I know them personally.
Okay.
And initially it went up like dramatically and they didn't sell in time and they got shellacked. I know
Hmm.
my butcher, okay, he's not
You
very
have a personal
sophisticated.
butcher? Wow.
The guy I buy meat from, come on, in
Okay.
the market. Yeah, I know he got shellacked on the long
Yeah.
bond in 2020. He was there crying behind the counter. I'll
He
never
didn't he
forget
didn't
that. So
sell he didn't sell when interest rates in the 10-year were like a 0.5%. He didn't sell.
no, he thought it would go to zero and beyond and stay there forever.
Okay. Fine. Well, that's why he's a butcher.
By the way, he's a millionaire. He's a butcher, but he's a multimillionaire.
Oh,
He's
really?
doing very well selling
From
things.
being a butcher or from speculating?
Yeah, yeah,
Oh, both?
yeah. I think so. Yeah.
Wow, okay. Maybe I should be a butcher. I
Yeah.
I can do shkita on chickens. I know how to do that.
You can just enter his store is, completely filled all times of the day, all the time. You can't, always a huge line. If mentally I could be a butcher, I would do that. It would be more profitable than writing economic essays, that's for sure.
Yeah, yeah. Well, Chazal say that if you have the urge to murder and kill people and steal, you should just be a butcher and then you'll be fine.
Yeah, do a mitzvah. My last argument, as for why I don't think, especially silver, will crash a lot more, is the whole cup and handle, the 45-year-old cup and handle formation. Look, we during 2025 we broke out of that cup and handle, and the $50 ceiling, was broken. So
Hmm.
now you expect it to become a floor if you think about it, from a technical point of view. Now, when you break out of a cup and handle formation that long, you expect it to lead to a rally which will last for years. And we got a rally that lasted for only 3 months. So I see this entire correction as nothing more than a retest of that $50 ceiling, which now turned into a floor. I think so. And we got down to 54, something like that. So we were pretty close to that floor. So even if we do get like a stock market meltdown right now, there's not a lot of room for silver to fall before it like touches that floor and gets some horizontal support, some strong horizontal support, because this is a huge technical formation, which I really believe will lend it like the power, the energy to shoot up again. So I can see, for instance, during a liquidity crunch, the price of silver falling, very briefly to 50, perhaps a little bit below 50, perhaps 49 or 48, before some really, serious dip buyers who missed the rally from 50 to 120 are going to say, okay, now's the time. This is my opportunity. I'm going to buy here. And no, I don't think silver is going to fall a lot below 50. I think it's going to hold because, as we all know, the longer the formation, the more power and the more validity it has.
I
So
think
I,
the
I'm,
saying is the longer the base, the higher in space, I think is how they say it.
yes, that's another way to say that. So I'm a strong believer in that. So I don't see silver having a lot more room to fall. It's another reason why I don't think it's going to fall that much, perhaps a little bit, not a lot. And, I'm not selling. I'm not selling anything.
Hmm.
And if it hits 50, I'm going to buy some more, by the way.
Well, I did sell. I had some options. I play the derivative game a little like as an extra thing. It's not any of my core positions, but I did buy a bunch of calls when we were on the verge of 50. like 6 month calls, and like I sold as we were going up and up, but I didn't sell at one. I didn't like say, oh, I know what the top is and I'm going to sell at the top. I kept selling every in $10 increments.
So that's it. I mean, like my entire view of the matter hinges on a couple of technical points and some, some fundamental problems in
Hmm.
the bond market. That's my entire case.
Okay. So I think you're right in the sense that at some point the Fed's going to have to buy the entire bond market just to keep interest rates steady. That'll be so close to the end that it won't matter anymore. And in terms of what the trigger is going to be, I know you don't know, nobody knows, but I mean we've been in a 6 month correction now, over 6 months. And it doesn't even feel like a crash. It feels just like boring sliding down. Like it's just
Yes,
been very boring. Hasn't been
yes,
exciting at
lately.
all.
By the way,
Um,
throughout spring, I was telling people we're probably going to have a boring summer.
mhm.
And right now, gold and silver are boring, quote unquote, because the volatility is quite low, and that's a good thing. Boring is good because that means they're bracing right now. I didn't buy, the prior bottoms. They were nothing but spikes down. It didn't look like the way gold and silver are supposed to bottom. But now we have a more drawn out kind of, bottom. It's rounding. It's the volatility is low. So it probably means that we're bottoming here and now.
Yeah. Okay, so before we go to the next topic, I just want to say that even if we might disagree slightly theoretically, I'm not even sure we do. But I think practically we completely agree because even if gold and silver does crash, even if it does, if you want to use that opportunity to get more physical, it's not really going to help you that much because premiums are going to go through the roof. You're going to get like six
Right.
month delay times, just like you did in 2020. You might have gotten a little bit of a better deal, but having all the stress of, am I going to get it? Is the guy going to answer the phone? Is it going to be available? That wasn't really worth it for most people. It was a big. It was just remembering March 2020 and watching my portfolio evaporate. It was like I knew it was going to rebound, but still the heart palpitations. It wasn't easy to call people and like make orders. Like I was I was sweating. So you don't want to be going through that. In any case, so I wanted to move on to Persia. Do you th do you think that Persia is trying to trigger a an oil spike by pretending to? I'm not even sure if they're pretending or it's just Trump pretending. I don't even know what's going on. But are they saying, "Oh, we're making a deal. We're not making a deal. We're making a deal. We're not making a deal." And meanwhile, nothing goes through Hormuz at all.
Yeah. Can you hear me, by the way? Because I think I muted myself.
Yes, I can hear you.
Okay. So, look, if I were the Persians, I would no doubt try to trigger a financial crisis, which would, impact Trump badly, the Republicans badly in the elections, and then Trump is going to turn into a lame duck, and then perhaps he's going to leave us alone, us Persians, and yeah. So it stands to reason, but I think there are bigger things at play. I mean, like if I look at what's going on with the Japanese bond market, for instance, which I think can escalate into a full-blown sovereign debt crisis. Now that's a bigger thing as far as I'm concerned. Now it's true
Well,
that, you
Japan
know,
and Persia are very highly related because Japan gets all of its oil from the Persian Gulf, right? It's really the
exactly.
same issue.
We could have a small pin, popping a small bubble, not a small bubble, but a medium-sized bubble, which will pop the huge bubble. So it could be a sequence of events. And no, I don't think the Persians are really, if they understand what they're doing and the ramifications on them also, because I think their existence relies on the existence of fiat currency also. I don't think there's going to be, their ability to hold power in a world in which there is no more fiat currency and we go back to gold and silver. I think is going to be greatly diminished.
Right, because they basically run on dollars. Their currency doesn't work. They've already hyperinflated. But it's hard to say that they realize that. You have to understand monetary realities to understand that Iran or Persia runs on the dollar, or the regime does at least. So yeah, we could have.
I think the Iranian regime, they're a lot like, the scorpion who's riding on the back of the frog, and
Mhm.
they have this tendency to sting, even if it kills them themselves. They have this tendency to, just destructive tendency. I think that's why they didn't take any of the very generous deals which Trump must have offered them.
So maybe as the final domino gets closer, we can see the stack. I mean, I might be seeing this incorrectly, but if Persia, if the Iranian regime, the Shiites, are trying to tip oil into a sudden spike when the reserves run out, let's assume that's what they're trying to do, and oil over a period of 2, 3 weeks after reserves run out goes to 100, $200 to 150, $200. And then you have the next domino being the Japanese government bond market. Well, after that, you have the next domino being the other weak bond markets in Europe, followed by the United States, and that should be it, right? And stocks will be somewhere as smaller dominoes between those huge stacks. Right?
Yes,
That's the line
it's
that I'm
it's
seeing.
it's important for me to point out that I think the mainstream media is going to try to portray it as though the AI bubble is popping and blame everything on the AI bubble, on the tech bubble. And why? Because I think it's more important for them to protect the bond market than the stock market. If I were the Secretary of the Treasury right now, I would actually, although it's a terrible choice, but I would actually prefer to sacrifice the stock market in hopes that it will trigger a rush to the safety of bonds and bail out my bond market so I can refinance the debt again at very low rates. You see what
Yeah,
I mean? And
yeah.
and and save government finances, even though the stock market is falling. I don't think he's going to get that chance. I think no matter what happens, there won't be a flight to quote unquote the safety of bonds again.
One of the arguments that people make, even on our side, that there's going to be 10, 20 more years until the end game, is that AI is going to be so super successful in increasing productivity, just like the internet was so super successful in increasing globalization, which arguably kept the end game from happening in the 90s and the early 2000s, and just made them into smaller bubbles popping. Do you think that's plausible that AI could save the system by increasing productivity tenfold before everything crashes?
Well, first of all, let's understand what AI does, which is different than any other like revolutionary technology. All prior revolutionary technologies helped us do things that we're not good at doing, like lift heavy loads or
Okay,
travel, huge distances or communicate to the other side of the world. These are things that human beings are not good at.
right.
And the technology came and improved our ability to do these things. So they were beneficial, they generated growth, they were beneficial to the entire economy. Here comes a technology which replaces the one thing we're good at, which is thinking.
Some
And
people are, at least.
but you can't argue with the fact that until now, human beings were the only creatures who could think rationally, scientifically. Here comes a thing that can actually replace us, make us redundant.
It
That
can't
means it
replace
could,
us. It can only seem like it does. But yeah, I think that's your
yeah,
point.
but for a while, I mean, like there are many professions such as lawyers or accountants that can be replaced by AI to the extent that it's going to generate lots of unemployment
Hmm.
and in not create, they usually say, oh, 1,000 jobs are destroyed and 2,000 are created. No, I think this time on net, there are going to be less jobs created. I mean, like, more jobs destroyed than created than This unemployment is going to lead to a recession. So
Hmm.
that's one point. And also, even during the internet bubble, the 2000 dot-com bubble, it took a while until that productivity showed up. At first, you had the crash. At first, you had the recession. And
Hmm.
only a few years later, after, things matured, technology matured, you could finally see that productivity gain. So even if AI is going to give us a productivity gain, it's probably not going to happen right now. We're probably going to have a recession before that happens.
I hope you're right. I don't want this to go on for another 10, 20 years.
Me neither.
Yeah. And on that note, how much longer do you think until we have that final banking crisis?
I
I'm sorry, I
always
have to. I don't know the answer
get
to this question either.
the timing wrong. I always and it's a theme with me because I always assume that other people see what I see. And I always ask myself, like, if they see what I see, why aren't they selling their bonds and buying gold right now? They're probably going. It's going to happen any minute now, and it doesn't,
Yeah.
because people, other people have a different view of the world. They don't see what I see, and so even though I'm convinced that ultimately I'm going to be correct, I could be wrong in the short term
I
because
know
there's
I know the
always,
feeling. I'm in the same space. I know.
for instance, like, assume that you're a stock trader and you say you have a very short time horizon. And you say, yes, stocks are going to collapse in 2 weeks, but right now, today, they're going to pop. So I'm going to buy them today. And by buying them today, you extend the life of the stock market by, a few more days. So, and it happens all the time. A few more days, a few more days. W- One of those days is going to be the last day, but it's impossible for us to say. So,
Yeah.
look, stocks tend to have crashes in the early fall, in September, October. So that's a dangerous time for them. So,
Yeah.
this could happen, in September or October. I think it has to do with simply, people coming back from vacation and having a look at the numbers and, getting scared all of a sudden and then start selling. So perhaps it's going to happen this fall.
You were saying that Iran runs on dollars. Israel does too. When the dollar falls, do you agree with me that the shekel falls too? And do you have any idea why the shekel is so strong? Because I don't. Does it have to do with AI? Does it have to do with an oil
Yes, it
pipeline? What
has
is
to
going
do
on?
with technology, of course, because Israel is a technology exporter. That means it pressures the shekel to get stronger all the time. But we've put all our eggs in one basket, the tech basket.
Hmm.
We don't have anything else other than high tech. If the high tech bubble implodes, we have almost nothing else. And we have less and less agriculture. We don't have any, heavy industry. Uh, I see very little, left if the tech bubble implodes. So the shekel is going to get hurt as well. I'm afraid I'm quite pessimistic regarding Israel's economic outcome. I do have I believe in our people. I believe in Israelis as being, resourceful people, and that they are able to come back from any disaster, any crisis. But yes, but I do think it's going to be a very difficult time for a while if the tech bubble implodes.
Hmm.
And I just want to point out, I don't know if people realize just the amount of cash which was invested in AI in the past few years. We're talking $1.5 trillion that was invested in those AI, data center infrastructure, and I don't think this it's going to pay out because although they claim that there's huge demand for AI services, the way I see it, most of that demand comes from other tech companies they use AI in order to do the coding nowadays. They don't code themselves. They use AI. They at most the tech guys, the engineers, they check the code which the AI gave them, and they just double check that it works. But so there was demand from tech companies for tech companies. So it's like a circle.
Back in the pile, everyone. We're going back to the pile.
Jump in!
Come on, everybody. We're going back to the pile.
And the moment the bubble pops, all that demand just, everything just goes away because you have very little demand from end users, from you and me, like people, actually at the end of that, private people who are willing to put some, to pay every month to get those AI services. There's very
Right.
little of that. Israeli people are proud of their newfound wealth, too proud, and I think it blinds them to reality. And I think there is going to come, a financial crisis to waken us up a bit.
Okay. Well, I'm looking forward to it. You and I will be the capitalists, and we will direct capital flows in the country, and we'll build our empires, and then we'll split it up. I'll take the North, you take the Merkaz, and we'll find somebody in the Negev to take them. And then we'll have like a triumvirate, and people will fan us with giant leaves and wine, and it'll be fine.
Jumbie, the chocolate icing. Oh, oh my, yes. Ooh.
That's exactly what's going to happen. Okay. Well, Oren, it was good to talk to you. And anytime you want to speak again, just let me know. I
I'll
always
let you know.
value,
I
yeah.
just want to point out I have for our Hebrew speaking viewers, I have a new website. It's called Tol Zahav, www.tolzahav.com. And you can find there all sorts of, my essays in Hebrew, some
Hmm.
new essays, some old essays. I'm also active on Twitter. Of course, you can find me. I'm the Silver Hermit, both on Twitter, on YouTube. And, I do lots of stuff. So follow me, please.
Do that. Thanks, Oren, and have a good week.
Thank you.
Enjoying my coffee.